Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from Shutterstock.co.nz. And today we lead with news. The oil price has taken another large retreat, even though the Red Sea and the Strait of Hormuz remain essentially closed. Alternative ways to shift crude oil out of the region are gathering pace and effectiveness. But this big drop is directly related to Scott Bessent, saying a deal with Iran to reopen the Strait is imminent, comments that have moved markets today. But first up, there was another full dairy auction earlier this morning, and prices in US dollars were virtually unchanged overall, but they did dip 0.9% in New Zealand dollars on a high currency. Of note is the new season volumes offered, very similar to the same event a year ago. But prices are now a full 10% lower this year than then. In the US, job openings fell in June, coming in slightly less than expected. The number of job openings fell in almost all industries except the logistics sector and in the federal government. Regionally, openings fell in the northeast, the south and the midwest, but they rose in the west. Also falling were US factory orders. They dropped 0.3% from the prior month, extending the revised 0.1% decline in May. This was disappointing because analysts had expected a 0.2% increase. It was the first month of back-to-back declines in nearly a year. Still, these orders are up more than 10% in June from a year ago, reflecting the earlier stockpiling urgency. Meanwhile, US exports of both goods and services fell 0.9% in June, while their imports of both fell 1.8% on the same basis. That narrowed their trade deficit, although not as much as expected. And the US Logistics Managers Index is still very high, but is now slowing as the stockpiling urgency seems full now. July demand for warehouse capacity and transportation both actually retreated in the month. The Real Clear Markets TIPP Economic Optimism Index edged down in August from July, missing market expectations of improvement and remaining below the neutral level. The 6-month economic outlook fell on weaker expectations for the US economy. In Canada, June exports rose, as did their imports, both much more than expected and delivering a larger trade surplus than expected, to a 4-year high. Canada's transition away from dependence on its now unreliable southern neighbour has been very impressive, I have to say. In China, they've set a new target to reach 50% of electricity produced from non-fossil fuels by 2030, up from 42% now. It is a heady and fast goal. In Australia, household spending rose 0.8% in June from May to be 6% higher than year-ago levels. This is a very consistent rising trend from September 2024, when it was under 1% from the prior year. This high gain was largely due to increased spending on cars, especially EVs, and for travel. And we must note that the H5 bird flu is killing more birds in Australia now. It is getting closer, even in eastern states. As we noted yesterday, the copper price has risen again. It's now over $14,000 a tonne and back at record highs. The US Treasury 10-year yield is now just on 4.63%, down another 6 basis points from this time yesterday. And the price of gold has risen to $4,088 an ounce, up $55 from yesterday. Silver's up $2 at $59.50 an ounce. Oil prices are now down another $4 from yesterday, now just under $76 a barrel in the US, while the international Brent price is now just under $79.50 a barrel. Hormuz transits are still very constrained, however. The Kiwi dollar is back up 30 basis points from yesterday at just on 58.9 US cents. Against the Aussie, we're down 10 basis points at 83.7 Australian cents. Against the euro, we're up 10 basis points at 51.1 euro cents. That all means our trade-weighted index starts today at 62.6, which is back up 20 basis points from yesterday. And the Bitcoin price starts today at $63,915 and up a minus 0.1% from yesterday. Volatility over the past 24 hours has been low, at just on plus or minus 0.7%. Join us later this morning for the June update of the New Zealand labour market. You can get more news affecting the economy in New Zealand from Shutterstock.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.